Welcome back, everyone. Today, we're diving into one of the most crucial topics shaping our future, the USA economic outlook. As we navigate through a landscape of shifting policies, global dynamics, and economic indicators, understanding where the American economy stands right now is more critical than ever. Hello, and welcome to Wise Vela Wisdom. I'm Eureka Yunan, and in this video, we'll be examining the current economic landscape of the United States. The economic health of the nation impacts each of us in profound ways, from job opportunities and wages to the prices we pay at the store. Recently, we've witnessed significant developments that have reshaped the economic outlook, from policy shifts in Washington to global market fluctuations affecting trade and investment. By unpacking these trends and indicators, we aim to provide you with a clear understanding of where the U.S. economy stands today and what it means for the future. So, let's delve into the numbers, trends, and policies driving the USA economic outlook. Overview of current economic indicators. GDP growth rate. The latest figures indicate that the U.S. economy has been experiencing moderate growth. As of the most recent quarter, GDP grew at a rate of 2.97%, showing resilience despite global economic uncertainties. This growth has been driven primarily by robust consumer spending and business investments. However, economists are closely monitoring potential headwinds such as trade tensions and fluctuating global demand, which could impact future growth prospects. Unemployment rate. Currently, the unemployment rate stands at 4.1%. This figure reflects a slight decrease from previous months, signaling a relatively healthy job market. However, beneath the surface, there are nuances, such as disparities in job gains across sectors and regions, that warrant attention. Efforts to bolster employment through government initiatives and private sector investments continue to play a crucial role in shaping this indicator. Inflation rate. Inflation remains a key concern, with recent trends showing a gradual increase. The current inflation rate stands at 3%, driven largely by rising energy costs, supply chain disruptions, and increased wages. This uptick in prices has implications for consumer purchasing power and business operations alike, prompting policymakers to carefully calibrate their responses to ensure economic stability. Key economic sectors. Housing market. The housing market has displayed resilience amid economic fluctuations. Home sales have been steady, supported by low mortgage rates and a steady influx of buyers. However, rising construction costs and limited inventory continue to pose challenges, potentially constraining affordability in certain regions. Monitoring these trends is crucial, as housing market dynamics often serve as a barometer for consumer confidence and economic health. Consumer spending. Consumer spending remains a cornerstone of the U.S. economy, reflecting confidence in economic prospects. Recent data shows a steady increase in retail sales, driven by strong consumer sentiment and wage growth. However, evolving consumer preferences and external shocks, such as inflationary pressures, could influence future spending patterns, requiring businesses to adapt swiftly to changing market conditions. Manufacturing sector. The manufacturing sector has faced notable challenges in recent months, including supply chain disruptions and labor shortages. Despite these obstacles, there have been pockets of growth driven by technological advancements and increased global demand for certain products. Addressing structural issues and fostering innovation will be crucial for sustaining growth in this critical sector. Fiscal and monetary policy. Government spending. Recent fiscal policies have aimed at bolstering economic recovery and addressing long-term infrastructure needs. Increased government spending on infrastructure projects and social programs has injected liquidity into the economy, supporting employment and business activity. However, balancing these investments with fiscal discipline remains a priority to mitigate long-term fiscal risks. Monetary policy. The Federal Reserve has maintained a stance of gradual tightening in response to inflationary pressures. Recent decisions have included incremental increases in the federal funds rate, aimed at achieving price stability while supporting sustainable economic growth. These actions are closely watched by market participants and policymakers alike for their implications on borrowing costs and investment decisions. Interest rates. Current interest rates remain at 6.7%, reflecting the Federal Reserve's cautious approach to monetary policy. These rates impact borrowing costs for businesses and consumers, influencing decisions on investments, housing purchases, and consumer spending. As economic conditions evolve, the Fed's decisions on interest rates will continue to shape the broader economic landscape, affecting everything from stock market performance to household finances. In conclusion, the current economic indicators paint a nuanced picture of the U.S. economy, characterized by steady growth, employment gains, and inflationary pressures. Understanding these dynamics across key sectors and policy domains is crucial for making informed decisions about investments, business strategies, and personal finances in the coming months. As we navigate through uncertainties and opportunities, staying informed and adaptable will be essential for navigating the USA economic outlook effectively. International trade and global economic impact. Trade deficit/surplus. The U.S. continues to maintain a trade deficit, indicating that imports exceed exports. While this deficit reflects robust domestic demand and consumption patterns, it also raises concerns about the sustainability of long-term trade imbalances. Addressing this gap requires strategic measures to boost exports, enhance competitiveness, and negotiate favorable trade agreements that benefit American businesses and workers. Global economic trends. Global economic events exert significant influence on the U.S. economy. Developments such as economic slowdowns in major trading partners or geopolitical tensions can disrupt supply chains, dampen export opportunities, and affect investor confidence. Monitoring these trends is crucial as the interconnected nature of global markets underscores the importance of global stability for sustained economic growth domestically. Tariffs and trade policies. Tariffs and trade policies continue to shape economic dynamics, impacting U.S. businesses and consumers alike. Recent shifts in trade policy have aimed at renegotiating trade agreements, protecting domestic industries, and addressing perceived trade imbalances. However, these policies also introduce uncertainties, affecting investment decisions and consumer prices. Balancing protectionist measures with open market principles remains a delicate task in fostering both domestic growth and international cooperation. Challenges and risks. Economic challenges. Current risks to the economy include geopolitical tensions, such as trade disputes and sanctions, which can disrupt global supply chains and investor confidence. Domestically, policy uncertainties regarding taxation, regulatory changes, and fiscal policies also pose challenges, potentially impacting business planning and consumer sentiment. Potential downturns. Several factors could contribute to economic slowdowns or recessions in the foreseeable future. These include a sudden spike in inflation leading to tighter monetary policies, unexpected disruptions in global supply chains, or a significant market correction. Proactively addressing these risks through prudent economic management and policy coordination is essential to mitigate their impact on economic stability. Long-term challenges. Structural challenges, such as income inequality and demographic shifts, present enduring obstacles to sustainable economic growth. Addressing these issues requires targeted policies that promote inclusive growth, workforce development, and equitable access to opportunities. Additionally, adapting to technological advancements and environmental sustainability imperatives will be critical in shaping the long-term economic landscape. Opportunities and future outlook. Growth opportunities. Certain sectors are poised for growth and investment, driven by technological advancements, changing consumer preferences, and emerging global markets. Industries such as renewable energy, digital infrastructure, healthcare innovation, and cybersecurity offer significant growth potential, attracting both domestic and international investments. Technological advancements. Innovation continues to be a key driver of economic progress, enhancing productivity, creating new industries, and transforming traditional sectors. Advances in artificial intelligence, automation, and digital connectivity are revolutionizing business operations and consumer experiences, paving the way for economic expansion and job creation in high-tech fields. Long-term outlook. Looking ahead, the U.S. economic outlook remains cautiously optimistic, supported by resilient consumer spending, robust business investments, and gradual improvements in global economic conditions. However, navigating uncertainties surrounding trade policies, geopolitical tensions, and market volatilities requires vigilance and adaptive strategies. A balanced assessment underscores the potential for sustained growth while acknowledging the need for proactive measures to address challenges and capitalize on emerging opportunities in the evolving global economy. In summary, understanding the interplay of international trade dynamics, addressing current economic risks, and seizing growth opportunities will be pivotal in shaping the USA economic outlook in the coming years. By staying informed and adaptable, stakeholders can navigate through uncertainties and position themselves strategically for long-term economic resilience and prosperity. Conclusion. Throughout this video, we've delved into various facets of the USA economic outlook, examining key economic indicators, sectoral trends, policy impacts, global influences, challenges, and future prospects. Let's recap the essential points discussed. We started by analyzing the latest GDP growth rate, which reflects steady expansion despite global uncertainties. The unemployment rate has shown improvement, indicating a resilient job market, while inflation trends have raised concerns about consumer purchasing power and business costs. In key economic sectors, the housing market remains robust with steady home sales and affordable mortgage rates, although supply constraints pose challenges. Consumer spending has bolstered retail sales, underpinned by strong consumer confidence. Meanwhile, the manufacturing sector faces challenges from supply chain disruptions and labor shortages but shows promise with technological advancements. Fiscal and monetary policies have played pivotal roles, with government spending aimed at stimulating growth and the Federal Reserve cautiously adjusting interest rates to manage inflation and economic stability. International trade dynamics and global economic trends have highlighted the interconnectedness of economies, with tariffs and trade policies influencing U.S. businesses and consumers. Geopolitical tensions and policy uncertainties present ongoing risks, alongside structural challenges such as income inequality and demographic shifts. Looking forward, there are significant growth opportunities in sectors like renewable energy and digital innovation, driven by technological advancements and evolving consumer demands. Despite these prospects, vigilance is necessary to navigate potential downturns and uncertainties in the economic landscape. In conclusion, the USA economic outlook presents a mixed but cautiously optimistic picture. While economic indicators suggest resilience and potential for growth, uncertainties surrounding global trade, geopolitical tensions, and inflationary pressures warrant careful monitoring. Proactive policy measures and strategic investments in emerging sectors will be crucial in sustaining economic momentum and fostering inclusive growth. I hope this video has provided you with valuable insights into the current state and future outlook of the U.S. economy. What are your thoughts on the economic trends discussed? Feel free to share your opinions and questions in the comments below. Your engagement helps foster a deeper understanding of these complex issues. With that said, thanks for watching. Please like and subscribe, and until next time, stay informed, stay curious, and I look forward to continuing this conversation with you. Take care.